Hello everyone, welcome back to my channel, Commerce Education Academy dear students. Well, in today's video, we'll discuss about the first chapter of Accountancy, Introduction to Accounting. This is the first chapter for first few students. So this is the part one. Now, these are the contents that we're going to discuss in today's video. What is accounting, definition of accounting, what is economic event, identifications, what is measurement, what is recording and communication, and whom we call as interested users of information, and how do you say that accounting serves as a source of information. So these are the contents that we're going to cover in today's video. So before introducing about the topic, I would like to give a little introduction about accountancy. So accountancy, as we all know, that it is all about preparing the financial statement and giving it to the decision makers to take up a right decision, taking up a right. So that is all about accounting. But the in nowadays the role and functions of the accountant has changed because there is a lot of a rapid change in the business environment. Because of that, there is a role of the functions of the accountant has changed. We can see the accountancy in different sectors, such as we can see the accounting in the environmental accounting. We can see how this accounting helps in crime branch, how to identify the manipulation of fraud of the huge funds. Okay, and then you can see as we know, there's a lot of advancement in e-commerce sector, wherein there's a lot of demand in the digital payment. Even there, we can see the accountancy. There's a great there's contribution in those areas. So accounting is not only about preparing the financial statement, also there is a lot of advancement, its contribution to the various sectors also. With this brief introduction, let's understand the today's topics. Now, before getting into the meaning of accounting, I would like to give a little explanation about the basic terms, that is identification, measuring, recording, and communication. And followed with, after this, I'll go back to this slide when explaining the accounting, because these terms are very important. Before understanding this, we need to understand the basic terminologies, right? Now, what is economic event? An economic event is all about, it's a transaction happens in the organization. The transaction should be happens between the two parties, and that transaction can be measured in terms of money. And that kind of transaction, we call that as an economic event. Okay, I repeat, and transaction happens in the organization, that is between the two parties, and that transaction should be measurable in terms of money, and then that kind of transaction, we call that as an economic event. Now, economic event, for example, how do we say the transaction has happened, and that too should be in a measurable form in terms of money? How to measure it? For example, if a company purchase the machinery, when the purchasing of machinery, there is an involvement of money. When we install a new machinery, there is an involvement of money. We can measure it in terms of money. And we have purchased, when an organization has purchased any fixed assets, or the organization has paid the wages, salary, okay, then we call that kind of transactions as a event, economic event, because that transaction can be measured in terms of money. So hence we call that transaction or that event as an economic event. Economic event can be classified into two types, that is internal and external. Internal event is all about when the event happens within the organization, then we call that as an internal event. For example, internal event within the organization. For example, when the raw materials is bought from the store department to the manufacturing department, there's a transaction happens within the organization, then between among the different departments. For example, when the raw materials is bought from the store department, from the warehouse to the manufacturing department, then that also a kind of a transaction, and that transaction happens within the organization, and that kind of transaction which happens within the organization, we call that as an internal event. Okay. Now, external event is all about when the transaction happens between the organization and the outsider, then that kind of transactions, we call that as an external event. For example, when the selling of goods and services, selling of goods, okay, that is to the customers, we call that as external event. Or rendering services to the customers, that is an external event, because customers are the outsiders, they do not belong to the organization. Okay, so these kind of rendering services and selling the goods and services, we call that event as an external event. I repeat once again, internal event and external event, any transaction happen within the organization, we call that as an internal event. Any transaction happen between the organization and the outsider, we call that event as an external event. Okay, I hope I'm clear with till here. Now, the next concept is accounting process we'll discuss. Identifying, let's understand the meaning of identifying now. Identifying is all about finding out or determining what kind of transactions to be recorded, how to identify it. The accountant will observe the each transactions with which there are the two conditions. One is it has to be measured in terms of money, and that transaction should be related to the organization. Only that the process of identifying, we call that as an finding out the type of transaction, which transaction should be recorded in the books of bookkeeping. Then that process we call it as identifying. That is to find out what kind of transactions to be recorded. What kind of transaction to be recorded? One is the transaction should be related to the organization, and the second thing, it should be measurable in terms of money. Upon that two conditions, we identify that, determine that this type of transaction. That's the first step in the accounting. Next, measuring. The measuring, how to this, it's a process where we're going to quantification. It's a quantifying the transactions. The each transaction should be in terms of measuring. It should be in terms of monetary unit. It can be measurable in terms of monetary unit, and that only that transactions we consider as a economic transactions or an business transaction. For example, now if an organization has purchased a fixed assets or any machinery, land, then that transaction can be recorded. For example, another example is if an organization appoint a personnel or a new chief executive or a new any worker, in that case, can we measure that transaction? Though it is an related to the organization, but we cannot measure the transaction. Okay, so it is very important to understand that the transaction should be measurable in terms of money. Only that transaction should be considered as a business transaction. Okay, am I clear? We got the meaning of identifying. Next, we understood how to measure it only in terms of money. That is in the when the transaction should be in terms of monetary unit, only that is to be considered. Next is recording. After identifying the type of transaction and after we know how to quantify the each transaction, and then the final step is the next step is the recording in the books of accounts, that the in the chronological order, there is a particular order according to the date wise or in the chronological order, we record all the transaction and in a particular manner where it has to be summarized as per the well established practice, and it is made available whenever the organization requires the report. Okay, that is all about the recording process. The next, let's understand the meaning of communication now. Communication is all about three R's, that is the right information to a right person and to the right time. So communication is all about 3R, that is providing the right information to a right person at a right point of time, is all about communication. Now, after preparing the report, summarized recorded financial report, and that has to be communicated to the end user, that is the internal and the external users, in order to take up a right decision. So that is all about the communication. The information is regularly, it is done communicated through the accounting reports, and it can be seen, the reports can be given every week, every monthly wise, or quarterly wise, or yearly wise. So the reports can be given as per the requirement. So this is all about the communication. Next we have accounting as a source of information. Now, how does accounting serves as a source of information to the organization? So accounting help us to take making a economical decision or economic decision. Economic decision is all about when a person make a choice at the situation of the scarcity, when there is a lot of there is a scarcity in the society and there's a shortage of supply of goods and services. At that point of time, we'll take up a right decision and choice we make, and that kind of decisions making more economical decision, and that we call it as an economic decisions. Okay, so accounting help us, the managers or the organizations, to take up the economical decisions, and It serves as the users who relay is nothing but dependent on the financial statements as their principal source of information. Now, who is dependent on the financial statement? For example, the stakeholder, the shareholder who has invested in the company share, okay, or invested in the company, and the banker who has given a loan to the organization. So these are the examples where they are the users who are interested to know the financial position of the organization. Okay, this is the second point. And the third point, it provides an information. It will help us to the organizing, the management to predict, that is forecasting, and to evaluate the function, the financial performance of the organization, and to avoid the uncertainty of cash flow. That is, cash flow is nothing but cash is coming in and cash going out. In the organization, we call that as a cash flow. In order to avoid the uncertainties of cash flows, can be done. We can predict, we can evaluate the accounting, this cash flows with the help of the accounting. Next, we have it provides an information for judging the management's ability in order to utilize the available resources in a more effective and efficiently way in order to reach the organizational goal. And the final, as it provides an information on activities which affecting the society. So with this, we can say that accounting serves as a source. It's a source of information which help the organizing the organization to take up the economical decisions, the one who are dependent, the users who are dependent on the financial statement. So for them, it is a very it's a principle, it's a source of information, and because of this accounting statement, it helps the organization to predict. It help to evaluate, to improve the financial performance of the organization in order to, and also it helps us to avoid the uncertainty of cash flow. And it also this accounting information help us to utilize the resources in a more efficient and effective way in order to reach the organizational goal. And finally, we have this information helps on making giving conducting how this activity is affecting the society. So this is all about the sources of information, and I hope now this is clear. Now moving on to the, after understanding all this, now it's better to get back to the meaning. So it is very easy to understand the meaning of accounting. Now, we, after understanding the meaning of all the various basic terms, now we can, it is very easy to understand the meaning of accounting. Now, the process of identifying, now the accounting process starts from the right from the identification, measuring, recording, and communicating the report, the financial report to the users. We call the complete process as an accounting. Okay. I hope now it's clear. The point is very clear. Accounting is just a process where it will identify the type of transaction which need to be recorded and how it should be measured. The measuring, it should be in terms of monetary units, and it has to be recorded in terms of chronological order and communicated. The financial statements, it can be communicated, reports can be communicated weekly, monthly, or every quarterly or every yearly as per the requirement. And then this, because of this accounting, it's all about taking the right decision and providing all this financial statement, the report to the interested users. We call that as an accounting. Okay, I hope now it is very clear. Now, the definition, which is given by American Accounting Association, that is in 1966, it defines as a process of identifying, measuring, and communicating the economic information to permit informed judgments and decisions by users of accounting, information. So this is the definition which is given by Ye. So this will be asked in your exams. So this is very important, the definitions and the meaning. Okay, now after understanding the source of information, now moving on to the meaning of organizing. Now, what is organizing? Organization. Organization is all about a business unit or a business firm or an enterprise. Now, an organ business can be of two forms. One is a profit-oriented, one another one is a not-for-profit. That is the organization which is set up in order to only render a service to the society. And that kind of organizations, we call it as a not-for-profit organization. Any organization which is set up in order to earn a more profit, and that organization or that business, we call that as a profit oriented. Now, depending upon the size of the organization or the depending upon the activities or the levels of business operations, we can say there is a different types of organization. It can be a sole proprietor. Sole proprietor is all about the single owner. company, okay, partnership firm. The partners firm is all about two or more persons join together and form a business. And like this, we have a cooperative society, company, private company, public company. We can say local authorities, municipal corporation, and various associations. So these are the various types of organizations. This is all about the meaning of organizations. Now, the last topic of today's is interested users of information. Now, after understanding the meaning of accounting, we understood that why accounting is it serves as a source of information, why it is important. All this we understood. Now we can say, if I say that accounting is a language of business, then how can we say it accounting is a language of business? Because that's accounting is a subject where we're going to communicate the financial performance of the organization. So hence we call accounting as a language of business. So this will be answer 1 mark. Dash is called as a language of business, then accounting is called as a language of business is the answer. Now, whom we call as interested users of information. Now, they are the two users, that is internal users and the external users. Now, internal users, as I said, internal and external, these are the users who are related to the organization, they who are in the inside the organization. Then those people we call them as internal users. For example, the chief executive officer, secretary, chairman, board of directors, these people we call them as the supervisors, okay, or the different managers of the different departmental managers. All these people who are working in the organization, we call them as internal users, okay. And the external users is all about the outsiders of the organization, outside of the organization, for example customer, okay, and the tax authority and SEBI, okay, SEBI, Security Exchange Board of India. Then we have stock exchanges, customers, we call them as, or the banks, okay, and then financial institutions. All these people, we call them as external users because they are interested to know the financial statement of the organization. So they are the users, and these users are outsiders. We call them as outsiders users. So we call them as external users, such as the tax custom duties we pay, na? The tax, that is tax authorities, financial institutions, the banks, the stock exchange customers. So these are the external users. And the users who are inside the organization, we call them as internal users. So this is all about today's video. In today's video, we understood the meaning of accounting, the basic terminologies and the process of accounting, and then the different uses of information, how this users are there who are interested to know the financial position of the organization, right? So these are the topics which we covered. Then this is all for today's video. And if you understood the concept, then please don't forget to like, share, and subscribe to my channel. And even you can follow on Instagram, and the details given below. And even you can join to the Telegram channel, and even the details is given below. And thanks for watching, dear students. See you in the next video.